Hello. Yeah, good morning, good afternoon, good evening, depending on your time zone. This is your host, Forex Trader, Peter. Welcome to today's weekly update. We have seen how beautiful, our trade has been going. We had predicted that we may have a change of trend in this region, and now it's playing out nicely like that. We all understand the flow from the top here. This is, by the way, this is the daily chart. This is Dxy that we assume that we are correcting. And this is A, flow to the upside, and this is B wave. We have said a lot about that, and we are seeing a C wave, at least an 100 extension to the downside. And if it's going to go past that and develop into something else, we'll see. Like I said, we have to be conservative when we are trading, to think that at least we are doing an ABC that would, go at 100 or stall at 100, but not more than 1618. And if you get past 1618, then we know it becomes an impulsive wave. We are still far away from reaching an 100 extension, because we're still going to break the low of this particular area. We'll break the low of this wave, and we'll break the low of this wave. We'll break them well below, to 94, 96 area before we begin to think of what next. And that's still a long way to go. For now, do you think that this wave will still go up and break the top? I cannot see that now. This wave has been confirmed to be bearish to the downside, so dollar will be losing, will be getting weaker. We are broken the primary fall here of this wave, or the major fourth wave here. And what we expect from this is probably, of course, dollar will be recovering to get weak again. Like I said, last week, I said, for now, we have passed 1618 still to the downside, taking this as the first wave, and this as the second wave of B, A, B, and this is more than 1618, then it is now going into a 1, a 2, in a bigger degree, that we have not done a 3 in the bigger degree. This is still going to become the third wave in the bigger degree. And within the third wave in itself, we are seeing this as a possible 1, A, B, C, of 2, of 3, that we have done the third wave of 3. And what we are about doing is the fourth wave of wave 3. Then we will do, after the fourth wave to the upside, we will do the fifth wave of wave 3 to the downside. And after that, we'll correct a bigger fall to the upside. Then after that, we'll go down again to do a bigger 5. That bigger 5 may well get close to this area, because this is fourth wave of 3 going up. The fifth wave may come to this area to test around this support here. It's possible that we will get a reaction between here and here for that fifth wave of 3. Then we'll go up again, probably to finish up with fifth wave, the proper fourth wave, then come down to do the wave 5. So in that say, if that happens like that, then we'd have done 1, 2, probably 3, 4, and 5. So that will complete a cycle here. Then we will now do a bigger recovery of the dollar, running an ABC maybe to this area. That will be a bigger recovery, and that will look like dollar has a whole lot of strength to go up and finish up a bigger cycle of correction, to between this area and this area or this area. We'll see how it develops. We're just giving zone, like I think we are giving zone based on experience, but we still have to make sure that this thing leads and print. The structure is printing. We know the structure that we are expecting, but the extent and all of that, we'll give it to them. And when they are done, we can now, tell where we put our feet, or we put the positions we put ourselves to take opportunity. But for now, we are doing a fourth wave correction. So in this fourth wave correction, so let me zoom. In this fourth wave correction, we show that the wave 5 of 3 has ended. There is a primary 4 here. We are yet to break that. We are yet to break primary 4 in this area. But at the moment, from here to this point, we have a retracement of around 23.6, which means that price may fall from here. Price may fall from here or not. I want you to get something and how to plan your trade if you are bullish momentarily on US dollar. So price may fall from 23.6 and it may get to 38.2, which is slightly around this area, or between this zone. So it's possible that price will do that. But if price is going to do that, we may see price go up. This is a daily time frame. I want you to see something here. There has been a lot of overlap here. These are momentum candles separating that this is a big movement. This is impulsive, okay? Now we are correcting also to the upside. We are not seeing a momentum candle build up here. So you can see this daily candle, an overlap to the downside, a movement also to the upside, and overlap to the downside. So in case you are still trading, this is not a zone you want to continue to buy now, because the price could turn down on you anytime, because at least 23.6 is still a zone where the price may fall. So if you are not buying from below here, this is where I think your stop loss can come to. Now, if you're buying the DXY, your stop loss should be around 103,500 or 400 area. And if that happens, price may come down, hit you, and continue with 5. So what I'm trying to say is that any sell setup you get, you will take, but the thing is that this may go up a bit, and if you see correction to the downside, then it's going to go to that area of 38.2. But if it goes up, becomes impulsive, then you will get a correction to the upside to come down. I don't know if you understand what I've said. If I go to the 4-hour time frame for you to spot correction, these are corrections on the higher time frame. These are still corrections here. These are corrections here. These are candle that shows momentum. These are momentum candle. This also, they are momentum candle. So what we are trying to say now is that these may have been an ABC here of A wave, because if you look at it, it could have been an ABC of A wave where we don't want price to come and break this low now. So that's the way I can show you an A, B, C of A wave, and this may be a B wave, in progress. So if this is a B wave in progress, this may be an A of B, probably an A, B, C, of B of B. What I'm trying to say is that we have done an A, B, C of A wave here. Of course, we're going to divide B also into a three-wave format, A, B, C of B. So the first movement to the downside might be an A of B. Then this movement again, A, B, C. If it's tall, might be B of B because B will go up. So then we might have a C wave of B. Maybe a reaction between here and here might give us a C wave of B. And that C wave of B technically can break this low. So we'll see. We'll wait. Your stop loss can be here. We wait because it might break this low to complete a B wave. And afterwards, we might now have an A, B, C. Then the low will now be the B. Then we might now have an impulsive C to the upside, which may react around 38. So that is possible. So if this goes up, we might see a bit, because if it's a C wave of B, it might be a quite sharp wave, like this, or like this, sharp wave. It might be a sharp wave to the downside. Then if we get that, fine. If we get that, fine. Sharp wave to the downside, it might just go very sharp to the downside, very, very sharp to the downside, breaking this bottom, but without probably encroaching around this area. Then we might have one more impulse to the upside before price begins to come down for the wave 5. Now, if we go to euro dollar, the same is possible. On the euro dollar, we can see that we are yet to kiss this area of the primary 4. Price is a bit, below 23.6, so we might still go a bit down. But again, we are going to depend on whatever is happening here, because at the end of the day, it might just be an ABC of a wave A, and like I did with the Dxy, we might be seeing an A wave here of wave B. This might be an ABC of B of B. We might still see a bigger move to the downside, and in that bigger move to the upside rather, might just complete a wave B without taking this top. So for now, if we are selling Dxy, this will be a good place. I'm sorry, if we are selling euro dollar, this will be a good place. Around 109,200 might be a good place to put our stop loss. Should we get an impulsive wave to break this high, then we may get reaction to sell a C wave, which will also become impulsive, breaking this low. If we get that, then we'll take a bullish move from here to sell wave 5 to the upside. And after wave 5, we'll come down one more time for a bigger fall. And we'll see how it works out. So, the price may come down, do some correction to the upside, breaking this. It might become impulsive, like I said, but then if it takes up this area, or it takes more than 618 of the movement to the upside, then you begin to smell rats. Okay, that's how to trade. Then the same thing goes with USD. The flow are discussed with your DXY. That's what to expect, is the same flow that we are expecting. For here, we can see this move on A and a B and a C wave to the downside. We are here to erode this area, but we have to see how this is developing. We might be also going up around this area. We'll see how price will, but we have to block our zone. We have to block our zone. We have to block our zone. So the price may be going up now anytime soon. This might just be a reaction for price to go up, correct more deep before we fall again. So we'll see how all that plays out. The DXY would lead because this more or less it's the way it's falling. You have to look at DXY. Once you hit 38, in case you're going to go up the more, if dollar is going to gain slightly more strength and hit up around 38, around that area is where you want to exit this for the fifth wave to the upside. So what we are calling is that either we go down and turn up, or we correct slightly to the upside, sharply to the downside. I think we still need one more sharp movement to the downside. That signifies it's a fifth wave. We need something like this here. You can see these two bullish and two bearish candles here. These are the momentum candles. So we still need to see that momentum to the downside to tell us that it's with C. And if you do that, then if you see that, then we can now see we've ended move to the downside to go up for wave 5 before we do a major 4 and a bigger 5. That's the flow that we are expecting. On New Zealand dollar, the way it's falling, but I still believe that we are getting a more bigger correction here. That is what I can see here, a much bigger correction. These may become an A wave, an ABC or B wave, and a C wave to the downside. This C wave to the downside may just take this low. I'm still expecting to see the movement around this area to break this low. And after this low, we're going to go up again. That is what I can see here. Of course, we're not coming to break this low, but technically we can take this low. So we continue to see how this is building. I think we are breaking this low for now, and we will wait. At the break of this low, we can begin to look for, if it coincides with 38, and everything is still pointing to the fact that we may see dollar react at that 38.2, looking at where the Nzdusd USD is. I see that it's going to take liquidity, grab liquidity below this low. I don't want to sell it. I want to wait again to grab liquidity out of this low to break up. On yen dollar, the way I see yen dollar, I see yen dollar at probably a WXY. Here we can see, you may call it an ABC, but probably a WXY. We can see ABC of X. And then we have an A wave of wave B or X here. Follow again, A, B, C of A. Let's use A or W. Then we have 1, 2, 3 to the downside. The first move here that represents the A of wave B. Then we have this move, the A wave here, the movement correction here to finish the B of wave B. then the sharp wave to finish C of wave B. So now it will now look at an A, B, C of that correction of wave B in the middle. The first wave A, B, C of A, then A, B, C. Now, this is what I said I'm still expecting on DXY, a sharp wave to sell it before we go to break again. So I still see that technically we are doing a WXY here, whereby we have this move here on the DXY. So if you want to plot the area where you expect this to get to, you may take it like this, and A, that's the A, then the low is here. Then you look for a movement between 100, 1, 2, 3, or 1, 6, 1, 8 for this. So this looks like it's turning higher. It looks we're going to break this top here. We are going to break this top here. That's what I can see. We might be breaking all this top without probably breaking this top here. So it looks like we are going to break this top. A little strength is still coming to dollar before we turn to the downside. That's what I see. So selling from here, or selling from this area, because you saw this movement, it's a dummy. That's a C wave of A, B, C here. So a C wave can always be confusing if you don't know the flow of pattern of B wave correction or X correction in a WXY or an a BC. So I think, yes, that's what then you turned again sharply to the downside, thinking that, you know, price wants to go down. With this recovery here, it's a very deep recovery. If you are selling, I don't want to sell from here. I see potentially from waist structure and pattern that this may go up and take this top without breaking this area. That's what I can see here. So wait patiently. If we come to take this low again, then it will be right time to sell. Breaking this low here at 148,200 is the right time to sell. But for now, I can see that it's going to push up. And pushing up from here, that might take how many pips to break this top? That will be a lot, really. That will be over 200 pips to break that top. Over 200 pips to break that top. Very close to about 200, 300 pips to break that top. Do you want to hold that? That will be a whole lot on your account. If you are even trading a very small lot size, that might be taking something between, yeah, $18, $21. So it's big. It depends on how much you have in your account. It's big. 18 to $21 will be big. So I don't recommend that you begin to sell from here. Let's wait. This between here and here will be a good zone to look for your sell, really. To be a big zone, a good zone to look for yourself. $18, it's quite big. So then let's go to the last one, which is gold. Gold. What do I see? Now, this move, like I explained from here, that we had the first move with 1, with 2, with 3, this is with 4, which may have been completed. This with 4 may have been completed. It may have been completed. If anybody wants to still trade, but one more fall is possible. It may just go up from here. If it breaks this point here, if it breaks around 130.47, 3,047, if it breaks above, then we are going for wave 5. But it can turn, as it's going up, it can turn to anything. It's going off collectively, but it may turn bullish. A break between this area of 37, if it breaks above 37 area here, if it breaks above this area, then yes, that most likely may mean that we are going up. But breaking the primary B here, at 30.48 ends the possible bearish scenario to have, let's say, an A, B, C wave. The C wave may have terminated here, but it looks rather too sharp to the upside. So we may still see a fall. It might go up a bit more as an X wave to give us a zigzag, to the downside, testing this area or thereabouts without breaking it might not break this area before we go up for that wave 5. It depends on whatever we see. So you must continue to look at the zone on the daily time frame. On the daily time frame, if you want to be cautious, I'm still holding buy from this area. I'm still holding buy from this area because this looks incomplete. I can only see this pattern of 1, 2, 3, 4. The fifth wave, at least, we still have to break the top one more time. Then after that, I will know that we have done with fifth wave. And if we do that to break up, that will be fifth wave. Then we are coming for a bigger fourth wave correction. So what do I mean by that bigger fourth wave correction? From here is with 5 in itself. So let me zoom. I've done this before. I've done this before. From this move here, we said that this is wave 1 in the bigger space, and the wave 2 in that bigger space. And this is wave 3 in that bigger space, and this is wave 4 of this flow. 1, 2, 3, 4, and 5. So now in the flow of this last 5, we said this is 1, 2, 3, 4, 5. So 1, 2, 3, 4. Then the fifth wave is also going to run 1, 2, 3, 4, 5. It's going to go up. Then once we complete that, we are coming to do a major correction of wave 4. And that wave 4, what are we saying that wave 4 is going to be? Then it's going to look like this. Should I turn to the weekly time frame for you to see well? Yeah, I have to turn to weekly time frame to see well. So this is where it starts from. It starts from here. We have a 1, ABC of 2, then the 3, ABC of 4. That's what we have. Then we now have with 5. So 1, 2, 3, 4, 5 on the weekly time frame. So you can see how interesting broccoli develops. So we now want to correct a bigger 4, taking this as a low of 2. Then this is bigger 4. So we are almost getting to the end of this. It's going to break up slightly. Then before we now see that bigger term. So the bigger term correcting with 4, it's not using this 2. It's actually going to use this as a 2. So 1, 2, 3, 4, 5. So if I have my drawing, it's going to be a bit messy. It's going to be a bit messy. So if I do that, I'm going to probably take this to come here. This is where it starts. Yeah, it starts there around December 7, 2015. That's where the move started. December 2015. That's the first phase of the move. That's where it began. For that zone marking, let me use this color. That's the first, the zone marking. Let's use that for, or let me use purple. Okay, let's use that. Then again, we saw it move to finish with 2 around this area. So that's the beginning with 2 ended here, A, B, C, around this area. Of course, we're going to take this low here. I'm going to take this low here. And then with 3 also ended, but the low of wave 2 of wave 3 will now be, sorry, of wave 4 here will now be here. So we can change this to this if we are using that. To that, this is wave 1. That is broken. So that is the flow. Then the next flow, so that will be when this one finishes here. So the movement started here. I don't want too much of this now. So we can just stick with this. We can just stick with this. That's where the flow starts from. 1, 2, 3, 4, and this is the 5th wave. Is really extended. The 5th wave is extended. So after this 5th wave, then we are coming down to run wave 4 here. This is wave 2. Then we are going to run wave 4, and that wave 4 will be a big fall. Coming close to this area. I don't know if we are going to get reaction around this area or not. It might be too big. It might be too big. It might be too big to run that. It might be too big to run that. It might be too big to run that. So another thing we can look at before we even talk of this as a possible, the 5th wave here, is to look immediately at this. Have we completed this wave here? Let's look at it in the green zone now. In that green zone, this is like a 1, 2, I think this is like a 3, 4, 5. Okay, if that is the case in the green zone, we might be actually running the green zone now. Like in the blue, 1, 2, 3, 4, and 5 in the blue. So that may mean like, okay, this is 5 in the blue. So we'll see how it goes. If we are running this to the green zone and this becomes 3 in the green, then this will become wave 4. Yeah, it may become wave 4. Yeah, it may become wave 4 in the green. So let's just see. It's only when we pull past this that we will now start talking that we are doing, here, and we will be coming down here. I don't think we are coming down here now. So I feel that we do this, try to correct this green, and then go up one more time, up here, because the fall here is going to be more than 2,000. If we begin to fall from here, yes, that's over 6,000 pips. You might be coming to like 7,000 pips to run that with 4 in the green. Yeah, about 7,000 pips to run that with 4 in the green. So if that happens, then we go to do a 5. Then after that, we now do a flow of this with 4 in this coloration from here with 4 in that coloration that will come down. Then after that, we'll go up again, then to now do a bigger correction, a much bigger correction. This is going to take years. It's going to take years, guys. We're just seeing the pattern and the flow now. It's going to take years. For now, we're still holding this 1, 2, 3, 4. This has not finished. The 5th wave in this coloration has not finished. It's going to take a while. So we still first need to go up one more time, come to this area. If we're going to go up and break structure to the upside, then we're correcting this with 4 in this coloration. Then go up one more time, then I'll do a bigger ABC. But for now, we'll take it in bits. We'll take it in bits. I believe I've helped you out. I believe I've helped you out. You have seen it. You can. That's gold. I think it's clear to me. What we are doing on gold, very clear to me. Okay, like I said, I want to go to the daily time frame for you to see the area of resistance. Once we break that, then it's bullish. Now, yeah, this may have been enough for wave 4. Breaking up is wave 5 for me from here. But in case we want to go down one more time, we shouldn't even break this 30-44 area. That's where you shouldn't break. If we intend going down again, we should not break that. We should not even take 76 retracement to the upside. So that's what you should do from here to the down. A block zone is 76, which is around this area of support. 30-44 should not be taken at all. Then a break beyond that means it's with 5 already, and you continue to count the internal structure and the way with 5 of this move to the upside, 5 of 5 of that move to the upside is going to go in divergence for us to fall. So we are expecting to fall. Short move to the downside, a bit more to the upside, then we're going to fall. With that, I've come to the end of this video. Please do like, share, and comment for us to do better. Your liking, your subscription, your comments help us grow this channel. Thank you.